We've seen some economists start to say that China's economy is showing some small rebounds of improvement. Does that tip the balance of power now back in China's favor as these negotiations keep going?
I think what tips the balance of power here is a question of time. President Xi can go for the long time. He doesn't have much scrutiny at home. He doesn't need to be accountable. He doesn't have media pressure. Trump has got election. He has got pressure from all sides. So from the Chinese side, I think the key advantage they have is a question of time, kicking the can down the road, making their random concession every now and then to keep this negotiation going and playing for time. That's the difference here, in my view.
John, what does success look like from a market perspective then on trade? It's not just about tariffs anymore. Clearly, it's about a much broader set of issues which are going to be a lot more difficult to reach agreement on and will take a long time to implement.
Well, I think it's a removal of uncertainty and some progress along the road. I mean, during January and early February, markets were getting a little bit ahead of themselves, in our view, in terms of pricing a full conclusion for this and thinking that we're going to roll everything back. It's unlikely that that's going to happen, and I think that where markets are now beginning to focus is on, can we get any sense that things are moving forward, and what will China do in response in terms of domestic stimulus? And here I think that, there's some quite interesting calculus. What we're not seeing is big, infrastructure-style, industrial-style stimulus that China have done in the past. We're seeing much more targeted measures, which are more focused on the domestic economy. So those typical China proxies, like Australia and some of the manufacturing hubs in Asia, such as Taiwan, Korea, etc., even Japan, are not necessarily catching that tailwind as China responds to the tension on trade with stimulus. So I think for markets, the way in which we need to watch this unfold is, number one, some movement that reduces uncertainty. I think that will build confidence generally. That's important for corporate earnings around the globe. But then understanding more of the nuance.
Okay.
Are we in a situation where we will begin to see China able to sort of re-enter trade unencumbered, or is it something where we're going to have to discount that for the longer term for some of that North Pacific region?